Okay, good evening, gentlemen. I think we can comfortably go live now. Why are you saying poor connection? Okay, sorry. Yeah, it should be better. Yeah, good evening, everyone. Welcome to Crypto Pulse Weekly. Um, our weekly dose of cryptocurrency news and happenings around the crypto world. Um, I need to switch to videos. Yeah, I need to switch to videos. I don't know what's going on. It's showing, it's not showing what I wanted to show. Okay, hopefully it should show well now. Can you, okay, just wave to me if you can see my screen. Okay, cool. So good evening, sirs. I'm Maz on Instagram and on Zoom. Welcome to Crypto Pulse Weekly. We're starting a little bit earlier today because there was some mix-up around the timing. We were supposed to start actually at 7:30, but I think the invite read 7 o'clock. So a number of people are already on the call way before our commencement time. So we'll just get on with it and start. For reference, usually I'll have this live stream on Facebook. So if anyone is interested in reviewing or watching the videos again, you can get them on, sorry, not Facebook, YouTube. You can get them on YouTube. And I'll also try to see if I can record today. I've had a lot of noise from Zoom complaining about using up my recording quota. But I'll also try to record and see how it goes. Okay, let's get started. Good evening, everyone, once again. This is Crypto Pulse Weekly. Our usual agenda, the 4 pillars. We'll review the news, we'll talk about the vital signs, and we'll talk about the crypto drip. And then I take question and answers. So for this week, I think the most pertinent one for this week has been the issue of Bitcoin's behavior during the week. I've had a lot of people ask me about, what's going on. Why is the market behaving crazy? And, why are the prices not going up? Bitcoin seemed to have stalled, and the altcoins seem to have lost steam altogether. So to explain that, you need to understand how currency markets work. Because if you understand how currency market works, it gives you context on how the cryptocurrency market is shaping up. So in the currency markets, there are a number of things that drive prices. There are economic activities that are pertaining to the countries involved. And then there are the speculators, which form the bulk of the markets. Now, the speculators have serious and various holds on the market. So they use things like derivatives, they use things like futures, they use things like options. And the reason they do this is so that they can pin the price to a certain range or to a certain price point at a particular time. It's a sort of insurance that institutional investors use. So if, for instance, I'm a big player in the market and I want to ensure that the value of the dollar does not go beyond 1.31 to the pound, I can put in an options contract, very huge options contract on the options markets to say that up until the 28th of August, the price of the US dollar should be 1.3 to 1 pound. And then when that contract expires, I have the option of either if depending on what kind of options are chosen, either buying or selling. Now, this kind of contracts are, I mean, they're in hundreds of billions, to be honest. And they sort of drive the behavior of the markets and how prices react, generally speaking. So we sort of had that kind of options now in play on the Bitcoin market. If you remember what I said earlier in the year or from last year, the institutional investors are now playing in the space. And what that means is Bitcoin is now more and more getting to behave like a real commodity. Let me use that word. So because of that, we've seen the market has stumbled significantly. A lot of use, as you see later in later slides, the market capitalization has reduced fairly well. The altcoins have actually taken a big hit. There's some attempts at recovery, but most of the options contracts, I think, are expiring between yesterday and today. So we might not see any significant movement until Monday or next week when, the price will start to go crazy again. But for now, that's what's happening. And because of that, Ethereum has dropped to 385. Chainlink dropped to as low as, I think, I can't remember now, maybe 12 or 11. It's back now to its 2 weeks level. So the level Chainlink is now was the level it was 2 weeks ago. Yeah, the sentiment is more or less on an institutional investor level. The sentiment is neutral. On retail investor level, like you and myself, the sentiment is still positive. But I'll explain that in the other aspects to come. In other news, SBI Holding, which is like the Japanese financial giants, are planning to launch a commodity futures and derivative platform for Bitcoin, Ethereum, and XRP. Well, you might not know the name SBI, but SBI is like the biggest currency trading bank of institution in Japan. And you might also not know that Japan is one of the top, I would say top 6 economies in the world. So if the financial giant in Japan is making such a move, there's bound to be some ripple effects in the months to come. So they're setting up a platform to allow people trade commodity futures and derivatives for Bitcoin, Ether, and XRP. So it's not only Bitcoin now that will start getting affected the way it's affected. We might start to see the same thing for Ethereum and XRP. This is another news that says that the former CEO of what's the name of this guy? It's BAKKT. BAKKT are like the biggest commodities and futures exchange in the US after the CME. I'm not sure which is bigger, rather than them or the CME, but those are the two giants. She used to work as the CEO of BAKKT. Now she's joined the Senate. She got elected into the Senate, and she's now the chairman, she's now like the chairman of the Commodities Futures and Trading Committee in the House. Of course, what it means is that if you have someone that's cryptophilic, let me use that word. If you have someone that's cryptophilic in the US Senate heading the committee, you're likely to see a lot of crypto regulations and modifications in the next 1 to 2 years. That's the interpretation of that news. In another news, we have the biggest shipping port in Oman partnering with TradeLens. TradeLens is a blockchain company formed by IBM and AP Maersk Muller. AP Maersk Muller is the biggest and one of the most successful shipping companies in the world. They partner with IBM to create a blockchain solution for their shipping and logistics. So the Port of Oman, I think, they're one of the first uptakers or the first adopters of that solution. Bearing in mind that cryptocurrency and blockchain are, even though separate concepts, they're sort of, working hand in hand. So the reason we have cryptocurrency was because people started building blockchain technology as a way to solve a particular problem. And that technology, one of the side effects was cryptocurrencies. Let me use that word. But that technology is still valid. And as a result of that, there's a lot of projects across board and across industries going on right now on using blockchain and extrapolating the value from the blockchain technology for everyday usage. So Port of Oman is just one of those scenarios where you have the adoption of blockchain for shipping and logistics on a very large scale. It's one of the biggest ports in the Middle East, by the way. Another news is the Alibaba registration of 2 patents in the United States. And what these patents are saying is that they have a technology to make the blockchain network faster and safer. So if you're applying for a patent, I mean, as you all know, it means you already have a solution and you don't want anybody else to take that solution or to copy that solution without paying. So what I suspect will happen is Alibaba might launch their own cryptocurrency or their own, digital token very soon and say, this is what our digital token is doing. And it might not be unrelated to DeFi, to be honest, but I mean, that's my hunch that we might have a digital assets from Alibaba coming our way. Then lastly, this guy is still news, but I just saw it up again. There's a group called the Simon Malls. They're the biggest mall operations in the US. They're partnered with the Bitcoin ATM company to install Bitcoin ATMs all over US. So now that coronavirus is, well, I don't want to use the word dying down, maybe tapering off or plateauing. I think that's going to come back into the works again. And what I suspect will happen over the next 12 months is that you have cryptocurrency POS terminals or POS terminals working with phones, so with smartphones. So I can create a POS terminal that connect directly to my cryptocurrency channel. And what I'll do is to say, if you want to pay me, I'll say, yeah, you can pay me. Just scan this QR code and pay. And you can choose to pay me either in fiat currency or you can choose to pay me in cryptocurrency. You already have QR code payments being rolled out on some POS, but I suspect that for the most part, it's going to be mostly phones and tablets that will eventually take over that space. So that's what's happening largely on the markets. In terms of this, I already told you last week, exchange balances. It's dropped another 0.6% in the last 24 hours. So exchange balance is an index of how much money is sitting, how much Bitcoins is sitting with the various exchanges. So it is the true temperature of how much Bitcoin is actually in circulation. Because if they're not on the exchanges, it means they're in people's wallets. The more it drops, the more likely it is for the price to spike due to shortage of supply. There are other news that I would have brought, where I just wanted to keep this short. There was another one about SBI, this same Japanese company, and another company in the US trying to buy what you call Bitcoin mining farms, to lease Bitcoin mining farms in the United States. It's all about grabbing as much as you can while it's still available. It's honestly like a gold rush in a very subtle form, where the big giants are putting installations and putting infrastructure in place to make sure that they mine the remaining Bitcoin to the highest possible level. I mean, it's probably not going to, how do I put it? It's probably not going to be so much in terms of what they're going to get. But if the mining cost starts to go high, it's invariable that the selling cost will also go high for Bitcoin. So as major institutions are taking positions and are trying to get into the minting game, quote and unquote, then it's going to increase the cost, and automatically that will trickle down to the value of Bitcoin as the index currency itself. So that's about what's happening on the market. So it's not something to be afraid of. It's just the options expiry that's taking hold of the markets. And just to explain again, what it means is that the options expiry are an attempt to pin the price to a particular level so that there's reduced volatility. And because cryptocurrencies like Bitcoin are already trading in Chicago Mercantile Exchange and BAKKT on the futures and options markets, there are a lot of billions involved. Let me use that word. But I think the current contract that's expiring today is the largest in the history of Bitcoin. It's worth about $1 billion. So when that contract expires, the price will start to move rather quickly again. So between now and the middle of September, I suspect that if the market does not drop, you are likely to see some decent gains on the markets. So in terms of crypto vital signs, last week we talked about the cryptocurrency market losing about 4 billion in market cap. It lost another 7 billion in market cap over the last 1 week, making a total of 11 billion reduction in value in the last 2 weeks. Same thing goes for altcoins. I think altcoins took a bigger hit because altcoins was sitting at about 200 billion plus. And that probably explains why you find many of the altcoins performing very poorly across board in the course of the last week. Our estimation and our size comparison still stays. Where we are currently in market capitalization is still very, very small compared to where the US equities markets are. So we're still on the journey for mass adoption. We're still on the journey for a major market capitalization. And just to say on a general note, I don't know when you joined cryptocurrency investing, when you joined the cryptocurrency market, or whether you're still, looking to join. But what I want to say on a general note is this: Bitcoin halving determines the market cycle, and that market cycle means that we're currently in the bull run. But the bull run usually has about a 6-month cooling off period after the halving. So we had halving in May. So we are in August now, June, July, August, September, October, November. So we expect that from the month of November, especially after the US election, we expect to see some significant price spikes on the markets. One, because that's when the effect of the halving takes hold on the blockchain full force. And two, because the US election is going to create a lot of volatility in the market, whichever way it goes. I have my money on Trump. I don't support him, but I have my money on Trump to win. But we'll see how it goes. If he wins or he doesn't win, the market's still going to go crazy, because usually the market will have priced in the outcome of the election in the days before the election. I'm going to say that again. The market will have priced in the outcome of the election in the days before the election. So the way the market works is, if there's a major market event like this US election that has at least serious medium-term implication, the market starts to behave in a way to anticipate what the possible outcome will be. And because of that, what you find out is that the market starts rising rapidly in the weeks leading to that event, or the days leading to that event. So you find out that a lot of buying activity takes place on the market before that event. So what then happens is, at the cusp of that event, the market, the traders will just trigger a sell-off, regardless of what the outcome is. And that automatically creates chaos. I can give you case in point, the Brexit, case in point, the US election, case in point, World Trade Center. Every significant event that has happened, the market automatically triggers a sell-off first, regardless of what it means. If it now happens to be that, that result is actually a good thing, then the market starts recovering. But it's a natural phenomenon. It's almost like a panic button. that traders press once there's a major event. So they exit as much positions as they can to bank their profits. So if we'll talk a bit today about banking in profits during volatility. If you have open trades and you have short-term swings, it's best to close out your position before the night of the election, on the night of the US election. Just saying, because there will be a lot of volatility, there'll be a lot of money lost and a lot of money made. Let me say it that way. Yeah, so our technical analysis in terms of crypto sites, this was what the market was looking like last week. And as I mentioned last week, that there was a possibility of either the market breaking into a sideways run, which is already what was happening, or try to break up or down. Well, apparently the market didn't succeed in either of that, because this is what it looks like now. It looks like it's broken down a bit from what it was last week. As a matter of fact, I think this is a better representation. Yeah, let me put that. Yeah, I think that's a better representation of what's happened. So the market's broken what was an original trend line, and it's now shooting sideways. A trend line is just trying to establish, what the short-term direction of the market is. So the market's broken that trend line, showing that we're in a sideways run. And as I explained earlier on in about 4 or 5 slides ago, that there are options on the market, option contracts against Bitcoin that are expiring tonight. From tonight, we're either going to see a drop in price up to maybe 10,500 or 11,000 before the market continues on its upward journey. And I must say that, a correction is always a good thing for any price appreciation. If you're on the market, let's say in May, May is too far. If you're on the market in June, you find out that between June and now, Bitcoin market itself has done about more than 20%, almost 30%, because it was trading around 9,000 then. It's gone up to 12,004, which is this tip you have here. It's back now to 11,203. So this correction is healthy. It shows that the trend is established, and it shows that the trend is consolidating. After this consolidation, what you're likely to find is a quick drop and an upward tick. In terms of overall sentiment, like we always do, the fear and greed index is a bit relaxed than what it was last week. If you remember last week, the week before last week and last week were both, extreme greed. Now it's dropped down by almost, let's say, 6 points to just greed now. It's still greed. Many people are still in the buy, but it's dropped. The intensity has reduced just because people are waiting what the outcome of this option contract will be on the market. Another thing to note is the overall sentiment. The overall sentiment is still buy. Last week was strongly buy. This week is buy, which is in agreement with the earlier slide I showed you on overall sentiment, greed versus fair sentiment. And to corroborate the point I made last week about putting things in context, and I'm going to say that again because it's important for you to know where we are and for you to know how to approach the market based on where we are. I think this market is a lot easier to deal with than the stock market, because for the stock market, there are thousands of variables that are pushing different companies. There are the mega narratives, but there are thousands of micro narratives that are pushing the market. In the case of cryptocurrencies, the mega narratives are basically, what market cycle are we? What's happening in terms of fundamental analysis, and what's happening in terms of the short-term and the medium-term technical analysis. So I always bring up this this chart of the psychology of the market cycle is basically designed around the Wall Street, which is the stock market. But it's the same thing. All markets have a similar psychology. So you go from disbelief here to hope of a possible recovery, to optimism, to belief, to thrill, then to euphoria when there's a lot of buzz around the market. Then there's complacency because the euphoria has been so great and people feel comfortable and nobody wants to sell off. Then all of a sudden, the price starts to drop, and then there's anxiety. The price drops further, then there's denial, of course, which is a natural human tendency. Then there's panic when, everything crashes back to maybe what it was before or worse. Then, there is anger, depression, and, all the cycle and psychology. And as I said earlier, to give you context of where we are, we're somewhere around here, believing that there's optimism and that this rally is real. When we get to November, and I'm not a prophet, don't quote me, but I foresee that when we get to November and November upward, November, December, January, the price appreciation will start to, initiate some belief in people, because then Bitcoin might have crossed the all-time high of last year of 14,000. And then people are like, oh, maybe something is really going to happen here. And then, we'll get into that thrill. And from a context perspective, like I usually say, that the same way the planetary systems are governed by the galaxies, and the galaxies govern the what you call the planets, and then the Earth, which is an example of the planet, has its own effect on our weather system, the way it behaves. In the same way, the markets are governed by macro events, macroeconomics, that sort of create spin-offs inside the market and at much lower level. What's the meaning of all what I've just said? The first thing we need to keep in mind is that Bitcoin halving has happened in May. We expect the price to start moving sharply 6 months after, which is November, which coincidentally sits side by side with a very major world event, quote unquote, the US election. And then automatically places 2021 as a perfect bull run year. So if you are in crypto before 2017, you would generally say that 2017 was the perfect bull run year. The year kicked off with Bitcoin hitting the market and just started going up and up and up and up till the end of the year. The market was in great euphoria about the price appreciation of Bitcoin. And it stood that way up until December 2017, and the market started to, come down, and all of a sudden the market crashed almost completely in 2018, and then started to pick up itself again in 2019 till we got to where we are now. So we need to understand that that's the cycle, and that cycle is definitely going to repeat itself next year, and you need to be prepared to take some profits at some point. I'll come back to that in a few moments. So today, I'm really generally going to talk about profiting from volatility. So I've shown you the slide around the price chart of Bitcoin and the behavior of the market and all that. And one question I get asked sometimes is, when do you sell? How do you sell? When is a good time to sell? How do I know I've made enough profits? The same way you gauge your appetite for risk and the amount you're investing in any particular investment portfolio is the same way you determine how much is too much. I know that's not a normal thing to say to a Nigerian because we always want more. But there's a general saying that says, plan your trade and trade your plan. Meaning, if I was selling oranges and I went to Songo Market to sell oranges, if I had 100 oranges to sell, my plan is to sell the 100 oranges. Now, it doesn't matter that when I get there, I saw a juggler who took 3 of my oranges and was juggling it and was attracting people to my oranges, and people were buying it. Now, the fact that people are buying some of it doesn't still mean that I don't want to sell all of it. So if the juggler keeps juggling and all I'm able to sell is 50 oranges, I need to stop the juggler at some point and look for another market to sell my remaining 50 oranges. Now, this analogy is just to explain what happens on the market. You need to have an idea, even if you don't have a pinpoint exit, you need to have an idea of when you want to exit the market. The reason being that the market moves like a snake. It comes up, it goes down, it comes up, it goes down, depending on the cycle. And I'll give you a good example. There was someone that wanted me to help them buy, I think it was Chainlink 2 weeks ago. So I bought Chainlink 2 weeks ago. when the price was really pumping. Then the price started coming down. And the guy is like, doctor, what's going on? Nah, this Chainlink is coming down. Like, yeah, just relax now. It's the Yoruba say that something that goes up always comes down. That it's coming down to go up again. And I'm sure the guy will have been worried and like thinking, "Ah, this is not right, you know. I just bought this thing, I just lost like 12% or yeah, or 20%. But that's the general market behavior. The market will always go up and down. And if you know how to bank your profits on the market, then you make money. If you don't know how to bank your profits, then you're going to be like those people on that psychology slide that I showed you that, you know, they were following the trail and the euphoria. And even when the market was closing out on them, they were still in disbelief until the market eventually crashed. The market will always crash at some point. But the genius of trading and the genius of profitability is to know when to enter and to know when to exit. Like the Yoruba proverb says, that is attack and retreat that you use to know a very skilled warrior. So it's important that you know when you need to take profit of the market or how you take profit of the market, and you have that plan documented somewhere, so that when it happens, you're able to, you know, assess your portfolio and make some reasonable decisions. So somebody asked me, you know, so let's say you make $1 million, what are you going to do with money? I already know what I'm going to do with the money because I already have a plan on when I'm going to exit, at which price point I think I'm going to exit, and what I'm going to do with the volume. Either the volume is in another crypto or the volume is in US dollars or the volume is in pounds. I already have an idea of what to do with that volume once I exit. And the reason I'm saying that is if you don't plan your trade, then you don't have a trade to, if you don't have a plan to execute. So let's take Chainlink, for example. So Chainlink is, when we got introduced to Chainlink was just, or when I got introduced to Chainlink was $2.50 or $2.60. Yeah, but about just over $2. And I was like, this thing is too expensive. It's even over $1 already. And you know, I bought some then I needed money. I just went to sell it. Lo and behold, I sold it at that time. I sold it at 100% profit. But guess what? The ones I had to buy later, I bought it like 3 times the original price of what I sold initially. So if you ask me and say, okay, when is a good time to sell Chainlink? I would say, well, it depends on when you think you're comfortable. Whatever price Chainlink is by August next year, I think I should be out of it. That's my personal opinion. I believe that by that time, Chainlink could probably be in the range of maybe $300 to $700 per one, if everything goes according to plan. So at that point in time, I want to bank some profit, and you know, even if it's to, you know, exit 50% or exit 75% or exit 25%, bank some profits. I was pondering upon an advice that, you know, trading platforms usually give to people, and you know, I was thinking about it and I was saying to myself, it's the same advice that the bank gives to you. The bank tells you to save money, but whose interest are you fulfilling by saving money with the bank? It's the bank's interest because you are creating liquidity for the bank. The bank doesn't tell you ab initio to, you know, invest money or use that money to buy stock or use that money to, you know, invest in property. The first thing the bank tells you to save money. The same way, the exchange platforms, or, you know, I used to do cryptocurrency, I mean, normal Forex before, and what they'll tell you is let your profits run and cut short your losses. On the surface of it, that's a very good advice. So your losses do not become very significant and it gets completely wiped out. But what they're saying is that create liquidity for us quickly. So if you cut short your losses, you already lost that trade. So your loss is their gain if you're trading margin, which is usually what happens in the currency trading. But if you let your profits run, what it means is that you're not going to collect your money from them. So your money, which is the profit, is providing liquidity. I don't know if that makes sense, but I was just, I was just pondering about, and I was just thinking, these advices that you hear as regular sayings, sometimes you need to question the rationale behind them. But for me, what it came to was the rationale was that, if you let your profits run, you make more money for the house than, taking out. It's just like playing poker, and you're playing poker and you're winning everybody and you're collecting everybody. And you're not collecting the money, but you're reinvesting the money, you're perpetually investing the money. If you don't bank some at some point in time, all that money is eventually going to sit on the house, because if you now, for whatever reason, let's say 15 games later, you're now at $1.5 million and you're betting everything on that game and you lose, you've lost all the money. But if you banked 50% at 750, it means you have 350 in your own profits. So it's food for thought. I will have other sessions where we'll talk about, how to determine how you exit and how you enter the market, buying the deep, selling the tops and all of that. But it's important for you to evaluate, whatever portfolio you have, evaluate how much it is, what's your target, how much do you want to bank out. So do you want to go on, do you want to buy Piccadilly Square, or you want to go on a yacht holiday or buy a whole yacht? It depends. I mean, if the money is enough for you to buy it, then you can go ahead and buy it. But you need to have a plan for, what I'm saying is you need to have a plan for the portfolio. We're just
don't let AY send Boko Haram to you for buying.
But basically what I'm saying is you need to have a plan ahead of time, so that when the time comes and everybody's getting giddy with excitement, you don't get carried away. So what's going to happen in 2021 is that there's going to be mass adoption. The prices are going to be sky high, and everybody's going to get excited. And you'll be wondering, should I sell? Should I not sell? Maybe I should hold it a bit longer. Well, I mean, the bull run might run throughout the whole of 2021 into 2022. Or you might just get to September and everything starts going south. But it's important that you know at which points you want to bank your profits. It's very, very, very critical. In the spirit of the month that we're talking about DeFi, I've just brought up this last one to talk about our top DeFi. And as you can see, Chainlink is still sitting atop the DeFi chart in terms of ranking and market capitalization. There's been significant drop since last week, but it's still sitting pretty. And again, I don't know why this thing keeps switching around. Last week is the bigger one. I think the slide is messing up my images. The bigger one is supposed to be this week's one, but the bigger one is last week's one. So this week you can see that the prices are better than last week. There's been 6% gain as opposed to 13% gain last Friday. So you have Chainlink and they're still sitting pretty. We have Synthetics also still sitting there, along with Compound. Where's Compound? Compound has been knocked off. But you still have ZRX. If in terms of good DeFi coins to buy, I think ZRX is still a very good buy. I think DAI is a very good buy. DAI has been around for a while. Maker is also a very good buy, but Maker is way too expensive now. Maker is already $643. But Lend, which is I think it's a very good buy. Lend and ZRX. ZRX has really done crazy in recent times. They are both very good buy. SNX is also a very, very good buy. Even though it's already at $5, I think it's still a very good buy. I'm not sure about Ren. Ren is a relatively newcomer. Totally unsure about Yearn Finance. Yearn Finance seems to be one of those hyperbolic tokens being blown out of proportion. People are already talking about it as performing better than Bitcoin. I don't really know what is going on. To be honest, I don't know what's going on with Yearn Finance. I think the only thing I can say is that the volume is too small. So any price inputs into that volume will cause a meteoric rise. So as you can see, Y Finance here was showing 29,962 as circulating volume, 963 here, circulating volume. That's very small because, in fact, that's like a fraction of Bitcoin is about 21 million total supply. So you can see the other guys in hundreds of millions and in billions. So for tokens that have very low circulating supply, the prices usually will rise very fast. It doesn't mean that they have anything significant to offer. I'm not bashing Y Finance. I've seen a lot of buzz around it. I've not really had time to research them, but it's just to keep in mind that that's what happens when you have very low circulating supply. As you can see on this chart, the only one as close to it is perhaps Bitcoin, which is also sitting around the same price range. So selling at 13,000, this selling at 11,000. Overbought, in my opinion. It'll probably still go up because they are very limited in supply. But in terms of fair investment, I think REN is a fairly good one to invest in. REN and ZRX. If you can't buy Chainlink at £14, REN, ZRX, and Lend are very good ones to consider. So that's it for this week. If you have a question, pop me your question on Zoom. Or okay, how easy is it to sell? Somebody already popped the question. Considering many people will be selling at the same time, I have majorly Ethereum. Well, so that somebody has asked the question already that how is it to sell off? That's where the mastery of the market, the mastery of the market is that I can't explain to you over in fact, I can't even explain to you over 1 hour because there's so many variables to determine how you sell and when you sell. If you have a crypto.com app, yeah, selling is quite easy because all you have to do is just click on trade and you can sell off very easily. The important thing is to plan your trade. So if you bought Ethereum, let's be very practical. If you bought Ethereum at $200, just for an example, if you bought Ethereum at $200, and you are thinking of making, let's say, you're thinking of making not 100% because you can make more than 100%. You're thinking of making 10x. Let's go 10x. 10x on 200, what's it called? $200 is $2,000. Definitely in the months to come, Ethereum will do beyond $2,000. There's speculation that it might be between 5,000 and 10,000. That's the alt speculation. But I need to have a target. So if I was holding Ethereum, I can say that I'm going to sell my Ethereum when it's 11x, meaning I will have 10x in profits and my original investment remains. That's a strategy. For Ethereum, it's quite easy to sell because Ethereum is broadly available and it's traded on almost all exchanges. For the low circulation tokens like YAM, as you currently so you asked another one. Like the second question was for those tokens that have low circulation supply, what is the assurance that it won't crash like that of YAM? We're making fun of YAM last week as YAM pepper scatter. What I can say is there's no guarantees for those ones, to be honest. And that's why, when we're talking about Y Finance now, I was a bit hesitant because those are newcomers. I don't really know who the guys behind it are. We don't know what their credentials are. We don't know their pedigree. So for Ethereum, we know Vitalik is an old timer. He started this thing when he was 19 years. That's over 10 years ago. He's 29 now. He has a lot of experience. He has a lot of, he has a lot going for him. And Ethereum has been fairly stable, barring the, hike in network prices here and there. Ethereum has been fairly stable as a platform for all sorts. In fact, the current DeFi evolution is based on Ethereum. So for Ethereum, I don't have that kind of fear. For low currency token, especially the ones with a lot of buzz, I'm usually not a fan because the more the buzz, the more likely that there is something hidden. Like we woke up one day in London and started seeing Hex advertising on taxis in London. So I'm like, who are these guys? What are they doing? And for me, it's actually a throw-off, because if you're just coming in now and your price is pumping meaning there's significant price appreciation within a short period of time, it tells me that there's manipulation going on and the reliability is in question. So there are no guarantees for those ones. Those ones is what you call in Yoruba language ojolomoto, meaning you're essentially on your own. If you only trade money, you're able to lose.
I laugh in Ibira.
And some people call them pump and dump coins, meaning they just hike the price and they abandon the market on the investors. So it's also important that you watch where you trade. If you want to invest in new assets, DM me. I have some opportunities that I can share, but you have to pay me. I'm not going to share them for free. Definitely not. Because sometimes what you get for free, you don't appreciate them. I paid to get those information, so I can't divulge them for free. But if you have interest in investing in portfolios and trying to get an idea of good exit points on those portfolios, you can send me a DM on Instagram, or you can send me, if you have my number, you can send me a WhatsApp message. But basically, you need to have a plan. You need to have an exit plan on each of your portfolio. And you need to know what you're going to do with them. So if you had, let's say somebody bought Bitcoin at the beginning of in March, during that severe crash when it went to $4,000. Let's say somebody bought 10 Bitcoins, that's 40K. And then he said, I'm going to sell this Bitcoin when it does 2x. When it does 2x, he didn't sell and said, okay, I'm going to wait a little longer. So it did 2x about 2 weeks ago during mid-August, when the price was at 12,460 something. Now, if he didn't sell at that point, it's not banked anything. But if he decided that I'm going to sell out of those 2x, I'm going to sell 1x, meaning I'm going to sell 30% of the portfolio, taking out the original investments. Or I'm going to sell everything except the original investment. What it means is that that person will have made 4 times. What am I saying now? That money, that 40,000 would have become 120,000. If you took out everything else, you would have taken out 80,000 in profits. And that 80,000 can determine what you wanted to do with it. Maybe, buy another asset class, or buy another cryptocurrency, or buy another, asset category completely. But you need to have a plan. That's what I'm saying. You need to have a plan for the portfolio. If you have 10 assets, you have 10 cryptocurrency assets that you bought, you need to write down, you need to know what, I don't want to use exposure, you need to know what your liquidity is in terms of what the portfolio looks like, the current value today, what value you want to exit the market, then how much are you going to exit off the market at that time. As I said, maybe the whole of next month, I'll talk about entry and exit points. But basically, you need to have a plan. That's what this is all about. You need to have a plan. Otherwise, you will be like that person that went to sell oranges in the market and got carried away by the noise and the fascination in the market, and basically didn't sell half of the oranges. So you need to have a plan to sell. For exchanges, so there's some people that are experienced there that have multiple exchanges and low valuation exchanges. For low valuation exchanges, that one, you're on your own, because those exchanges, some of them, the total capitalization of the exchanges it's not up to 500K. So for you to sell out a position of 100K, you will sweat, because bear in mind that for every seller there has to be a buyer. So if you don't have a buyer, you can't sell. So you can only sell to the extent to which you have buyers. So it's important for those ones to leave when the ovation is loudest. which is if you had a plan to sell at 10x and in the market is at 10x and the market is still pumping, you need to at least exit a percentage, because it might get to a point where the market has gotten to the peak, but nobody else is willing to buy. And all of a sudden you want to sell, there's nobody to sell to. Then the wolves of Wall Street will now start setting prices lower and lower and selling you off at lower prices. At that point in time, you're already making losses against your potential profit that you could have made. So that's, I think that's about it. I don't know if there are any questions for the guys on Zoom. I think that answers the question for the guys on Instagram Live. Any questions on Zoom before call it today? Cool. Thank you, everyone. We'll see you again next week, Friday. I think next week, Friday, we'll talk about some entry and exits and pricing. And probably talk about some tools to help you aggregate your crypto portfolio as well.
Sorry, Uncle Demi.
Sir.
Yeah, my question would be if anybody would be interested in the service, getting to do something else. So what would the charge be? Or is going to be as per whom you know?
Why are you asking me that question on the forum? I've already told you the modus operandi. If you want to know, send me a DM.
All right. Okay.
Dr. Lalere, you wanted to say something?
No, sir, I just want to say thank you very much for this information.
No problems.
Thank you.
Dr. Lalere, you are owing me. I'm sure you won't answer me.
Okay, so I think that's it. If there are no other questions.
When I come and pay, I will